Hello and welcome to the Clear Crypto Podcast, brought to you by StarkWare and Cointelegraph. No jargon, no hype, just straight talk on what crypto and blockchain do today and what they'll do tomorrow. Clear and crypto, if those two words sound like a contradiction in terms, you're in the right place. Maybe you're getting started in this world. We're the people who are going to get you up to speed. And if you're an OG and already live and breathe this stuff, don't go anywhere, because as we always say, our big challenge right now is to work out how to communicate this to the wider world. And I guarantee that you will be better at doing that if you stick around here. I'm Nathan, a journalist who's fallen into blockchain. Today I head media at StarkWare, and I'm joined by the wonderful Gareth Jenkinson, head of multimedia at Cointelegraph. Gareth, how are you doing?
How's it, Nathan? I'm good, and you? It's good to be home and good to be doing an episode after we finally got to meet in person after many, many years working together.
Yeah, that was wonderful seeing you in Cannes, Gareth, because you do actually exist. That was fantastic. For those who didn't see the last episode or the episode before last, we were in Cannes at EthCC, which is the major meetup of the Ethereum community, Ethereum being the second largest blockchain. And it's really interesting, Gareth, when you go into these places, people imagine that in the world of blockchain, because we're so remote, there's not that sense of community, that people aren't excited to see each other and work together, whereas really, this is one big community. It's all about community, right?
It is all about community. And if you go to these different conferences and they're kind of blockchain specific, you get a real feel for that community. I went to Bitcoin 2025 in Las Vegas, full of Bitcoiners, and that's a very specific group of people. You go to something like EthCC, it's full of Ethereum enthusiasts. If you go to Solana Breakpoint, it's full of Solana enthusiasts. So it's nice to get a feel for the different communities that exist out there.
Yeah, absolutely. And it always amazes me how excited people are to actually see each other face to face, to interact. And I think there's a sense that people are really more generous with their ideas, with their research, really, really keen to collaborate, maybe more than in other parts of tech. Is that something you find?
Definitely. I've been to Web Summit, which I think is probably one of the biggest tech conferences you'll go to, like 70,000 attendees. And there it just really feels like a roadshow, lots of booths. And if you go to something like EthCC, it was all people building different tools, products, services on Ethereum. And they all want to talk about what they're doing, and they have shared ideals and a shared vision of where everyone is going together, even if they're doing completely different things. So I do agree with you. There's definitely a much greater sense of togetherness than other sectors of IT and fintech in general.
Fascinating stuff. Now we're going to move from Ethereum, which was the theme of that whole conference, to talk more today about Bitcoin, because we've talked in a lot of these episodes about Bitcoin. We spoke about the Bitcoin white paper and how Bitcoin actually brought into being the whole realm of crypto with a whole set of radical and new and interesting ideas. And we've spoken about different ways that people use Bitcoin, engage with Bitcoin, think about Bitcoin. But it's quite limited how people are using it today. I'd like to have a conversation today about how all of this may unfold and where it may head. What are your curiosities in this area?
Yeah, I like to think about what people can do with their Bitcoin. And over the past 15 years, a lot of people have been reluctant to use their Bitcoin, knowing, of course, that Bitcoin was created to be peer-to-peer electronic cash. As it's become more and more well-known as a store of value, people have become far less willing to part ways with their Bitcoin. But they've also been hamstrung by the inability to use their Bitcoin in different ways. We're finally getting to a point now where there are a lot of technological innovations that allow you to do different things with Bitcoin. Smart contract blockchains like Ethereum opened up the world of decentralized finance, being able to borrow and lend and do all sorts of things with cryptocurrency tokens. People want to do that with Bitcoin, and considering how valuable it is as an asset class, nearly over $2 trillion in Bitcoin value, people want to do stuff with it, but they can't do that much yet. So we want to explore what they can do, how close we are to really realizing a myriad of different sort of DeFi protocols on Bitcoin natively. And I'm really excited for this conversation today because I think it will open up a much better understanding of where we're at right now and what the future looks like for doing different things with your Bitcoin.
So let's bring in our expert, who is Ilia Volokh, who is Bitcoin lead at StarkWare, where I work. He always has a fascinating take on things. Ilia, hello. Thank you for joining us.
Hello.
I was determined after watching your talk recently in Cannes that you would come on the show because you actually had the room captivated. And I'm going to throw you straight in and ask you about the analogy you gave about mattresses. What did you say?
I don't remember exactly what I said, but I think in a nutshell, there is a fantasy that people have that they will put gold under their mattress and that it will somehow multiply. And obviously, for gold under the mattress, in the literal sense, this is out of the question. But for Bitcoin, it's not as clear that it's out of the question. So specifically, I think a vision that the world is now starting to adopt or to show more enthusiasm in is the idea of Bitcoin participating in finance and not just as chunks of gold in people's cold wallets. And I think this is a very, very exciting prospect for Bitcoin and for finance.
So Gareth, as you do so beautifully, decode some of that for us and kind of explain to us what we mean about Bitcoin being static and what we mean about it possibly becoming more usable.
I think in a nutshell, Bitcoin is already considered to be a fantastic store of value because of the way that the network works. You know, you're monetizing energy and computation. And over time, that finite characteristic of Bitcoin means that it holds and accrues value. So naturally, people want to hold value. And the old sort of saying is that you put money under your mattress to save for another day. But if you just keep it under your mattress, you end up not doing anything with it. And yes, it might increase in value over time, but you're not necessarily getting the full utility out of it. And I think most people today are very reluctant to do anything with their Bitcoin because they understand how it works, they understand its properties, they understand it's going to be incredibly valuable in 10 years' time. So they're reluctant to use it as money, which it is. And they'd rather just store it under their mattress and save it for 5, 10, 15 years before they even think about spending any of it. But you can put it to use. And there's a lot of fantastic innovations that are coming in the space that are allowing people to do different things with their Bitcoin without parting ways with it. So keeping it under the mattress, but putting it to work in a myriad of different ways.
Gareth, as always, you're nudging us along in our understanding. Now let's pass over to Ilia. Ilia, where is this going? What's this going to look like?
Okay, so the starting point, which Gareth touched on, is that Bitcoin right now, in the sense of the protocol, not the token, it has very limited functionality. It's designed on purpose to only support people transferring Bitcoin from one person to another. Now, this is not very rich from a financial point of view. It doesn't support financial protocols or financial instruments. So it's relatively difficult to do anything with Bitcoin beyond transfer it between people. Just to be more concrete, what I mean is that natively on Bitcoin, you can't build decentralized exchanges. You can't have derivatives markets that are native on the protocol. So in order for Bitcoin to generate economic value, it needs to somehow leave the Bitcoin network in some sense. And there's a few ways in which this can happen. Right now, the most common way is to basically delegate ownership of your Bitcoin to some trusted party, and then they will mint for you an IOU of your Bitcoin on some other network where economic activity is possible. For example, there is a very well-known Bitcoin wrapper called WBTC. What it does is it basically allows you to move your Bitcoin in a trusted way from the Bitcoin network to Ethereum, and there you can activate it in all sorts of ways, be it loan markets or investment into DeFi. And this type of flow where you delegate your BTC and then extract economic value from it is becoming much more widely adopted in the most recent years.
Gareth, some people are doing today what they call wrapping their Bitcoin, which I have the image of someone kind of taking a candy and wrapping it in a nice wrapper. Explain what wrapping the Bitcoin means, and then we'll go to Ilia to explain what the downsides are for that.
Yeah, so in a nutshell, the Bitcoin protocol itself is fairly limited with what you can do with it. And you cannot do a lot of the decentralized finance solutions on Bitcoin that you can do in other blockchain ecosystems like Solana or Ethereum. So if you wrap Bitcoin, you essentially lock a certain amount of Bitcoin into a smart contract. So you give the Bitcoin to a trusted third party, and then the equivalent amount of that asset is created in a token called wrapped Bitcoin that lives on the Ethereum network. And there you can do a myriad of different things with your Bitcoin, from lending, staking, XYZ. I guess the sky's the limit when it comes to that. But essentially, you're taking Bitcoin off the native Bitcoin protocol, wrapping it and allowing it to live on another blockchain protocol in terms of the value that existed on the Bitcoin protocol.
And Ilia, why may some people dislike this approach? What's the downside?
Well, in a nutshell, it's security. People don't like to forgo ownership of their Bitcoin. And in this proposal, what's happening behind the scenes is you have a trusted party, which is the issuer of WBTC. And these people, in order to mint you an IOU, they require custody of your Bitcoin. Now, for many Bitcoiners, this is pretty much the worst case scenario. There is still a significant amount of adoption on the order of dozens of billions of a value that's been transferred via WBTC to Ethereum. But the vast majority of Bitcoin value, which is roughly, I think, somewhere between 1.5 and 2 trillion, it does not want to accept this drawback.
Mm-hmm. And I think there's a cultural element here, because if we talk about Bitcoiners, a lot of these are people who have mined their own Bitcoin, maybe have their own mining facilities, who really believe quite strongly and ideologically in that value of actually holding their own Bitcoin as Bitcoin. So that seems to be one of the psychological barriers to adoption here. Now, Ilia, you were talking about how people are kind of getting around these limitations of Bitcoin. That was the first one, wrapping it. What is the second thing people are doing?
I guess future-oriented approach is people are trying to develop bridging technologies which require less trust. So what we discussed so far, this sort of trusted bridge, really involves a central entity that receives custody of your Bitcoin in the full, strongest sense, in which they own it and you don't own it, and then they issue you IOUs. On the other extreme, you have very trustless bridges. Having this type of technology available to extend the functionality of Bitcoin or to build trustless bridges from Bitcoin is difficult, because right now the research suggests that it requires changing the Bitcoin protocol in a substantial way. And it appears, at least at the moment, that this is a hopeless endeavor. The Bitcoin core people, the people who determine and collectively decide on what are the good directions for developing the protocol, they're opposed to this aggressive change. Thankfully, there are some solutions that sort of interpolate between these two extremes, and they operate under more subtle trust assumptions, where the person who gave the Bitcoin doesn't forgo custody of it completely, and the entity that receives it, also doesn't obtain full custody. So it's sort of an intermediate solution. It's attractive to many Bitcoin whales that are really looking to extract some value from their considerable assets, but are also fine on some sort of security compromise.
So Gareth, can you just drill down and summarize the difference between those two approaches, the approach of wrapping and the second approach we discussed?
Yeah, so quite simply, wrapping your Bitcoin requires you to trust a central party to take your Bitcoin and give you another asset that operates on another blockchain that you can use for a myriad of different use cases. But you forego the ownership of your Bitcoin. Versus the second approach, which is probably one of the most innovative and exciting approaches to scaling Bitcoin, is an approach that doesn't require you to give up the custody of your Bitcoin. And many Bitcoiners are libertarians. They believe that you should hold your private keys, you shouldn't part ways with your Bitcoin. And this has been a big sort of stumbling block to any sort of real headway being made for, non-custodial, decentralized finance solutions on Bitcoin. You've got a few different approaches that are getting close to it. And I from all the conversations I've had, I think StarkWare's approach to scaling Bitcoin is one of the most exciting. And of course, you've got Lightning, you've got RGB, you've got Liquid from Blockstream. They're all different approaches to, doing different sort of assets within the Bitcoin ecosystem, or allowing you to do different things without parting ways with your Bitcoin. But that's the big takeaway here, is one requires you to part ways with your Bitcoin, and the other one allows you to either keep a fair amount of control of your Bitcoin and still be able to do a lot more than you would do with it, rather than just keeping it under your mattress.
So Ilia, you're working on this stuff all day, every day. Give us two scenarios that you see unfolding. And if we're talking in 12 months, 18 months, a couple of years, what are we going to be doing? On the one hand, if this protocol change happens on Bitcoin, and there is a change to the way Bitcoin works, we call that OPCAT. And if that doesn't happen and we're building anyway functionality on Bitcoin, run us through those two scenarios, what we'll be able to do in 18 months, 2 years' time.
Okay, so I'll start from OPCAT. So OPCAT, it's short for an operation of concatenating elements on the stack for people who care. For people who don't care, it's just an operation, but its impact on the computational expressiveness of Bitcoin is significant. It will basically allow people to perform, albeit in very inefficient ways, but still to perform general computation on Bitcoin. If you have this, then you can construct in various perverse ways trustless bridges from Bitcoin. If you have this, then again, I'm setting aside battle testedness, which is very important for people who actually move money. But if you have this, then in principle, there is no real need for wrappers. And the question will boil down to a trade-off of economic efficiency. Maybe you need to do things very fast, in which case you're willing to accept more trust, and otherwise you're not. And you're willing to pay for this trustless bridging in which you don't lose any custody. The other, probably much more realistic option, after talking and hearing a bunch of conversations of core Bitcoiners, is either have no protocol changes or have very mild ones in which the solution will not be trustless bridging, but it will be this type of interpolated solution that I discussed before, where the owners will forego some extent of their custody in favor of allowing them bridging, basically. The more interesting question, at least for the short term, is what Bitcoin will actually be able to do when it participates into DeFi. What are the actual things, the use cases that it unlocks for real people, who I suspect won't care at all about OpCat or BitVM, etc. And interestingly, there is already two product market fits that we identify. One is people are willing to deposit their Bitcoin as collateral and borrow dollars against it. This is true on a pretty massive scale, on the billions of dollars. What they're doing is mostly exposing themselves to an asset which exposes them to most of the value creation in the world. So the stock market is mostly USD denominated. And if you can get exposure to dollars without selling your Bitcoin, then you're achieving two things. One is you're not losing your Bitcoin position. You still are exposed to the appreciation of it with respect to dollars. And the other is you can do stuff with dollars, which is always nice, and it's not a new game. So this is one avenue. The other avenue is people are willing to deposit their Bitcoin in black boxes, usually called vaults. And then there are other companies or entities that are willing to provide the service of operating these vaults. And these basically function as hedge funds. They receive Bitcoin as a deposit of capital, and then they do things with it. What sort of things? It can be on-chain activity. It can be cross-chain activity between a bunch of blockchains. And it can be off-chain. I take your Bitcoin and then I go and I buy a bunch of potatoes and, I don't know, I operate a farm. So these two products are basically borrowing against your Bitcoin and Bitcoin yield. And they are in high demand. The second one is pretty much a no-brainer because obviously who doesn't want to put money under their mattress and have it multiply? But the first is pretty interesting.
I definitely agree that the second option is probably the most exciting avenue for Bitcoin, becoming a real financial tool. When it comes to some of these TradFi approaches, Bitcoin treasury companies, do you have any thoughts on the difference between that and, native tools or approaches to scaling Bitcoin? And if they complement each other in some way or another?
Yeah, I think this is a very good question. In a nutshell, I think it's worth presenting the idealistic vision. So in the idealistic vision from the perspective of a Bitcoiner, when you deposit your Bitcoin, you would like to maintain some sort of ownership or at least transparency on what is happening with your assets. So as soon as you go off-chain, for example, if a hedge fund that you deposit Bitcoin into decides to go and, farm potatoes, you would really like to know about that and you would like to be able to track everything that's happening. And that's more difficult in the TradFi world, and it's also not really a requirement. If all of the activity, all of the economic activity remains on-chain, then I think it's much closer to this ideal of having a decentralized economy. There is no one party that could pull the plug, and if there is, you would know about it. On the other hand, at least for now, TradFi is still much more capital efficient and also offers more sophisticated financial tools.
Regular listeners to the show will know that Gareth very often brings ideals into all of this. It's not just about money. It's not just about information. Gareth will talk very often about the ideals that he sees attached to crypto. And Ilia, I want to ask you about that. So my two questions for you for finishing off are, first of all, what is it with potatoes? You've mentioned potatoes twice in our conversation, and at your talk in EthCC, you actually had a picture of a potato. So I want to know what the potato connection is with you. But more importantly, maybe, where do you see all of this in big picture values? how the world should work. What's it all for? What are the ideals in all of this for you?
Okay, potatoes, I feel it's a very personal question, but it's just a nice placeholder. Okay, for the big picture values thing. So this is just a personal take, but I think it's nice for finance to be transparent. I think it's a good property. I think it gives people lots of control over their lives, not in some sort of a big conspiracy sense, just in the sense that they are able to choose which types of assets they want to hold their capital in and how they want to manage their wealth. I think this transparency also encourages much better practice, and I think it will end up avoiding lots of big crash failures like people saw in the last, few dozens of years. So I think it's a healthy direction to go in. That being said, I see no value in imposing this on anyone. I think it's good to unlock the potential of Bitcoin to perform economic functions, but I don't think there is any, from my point of view, there is no agenda of sort of convincing people to do one thing or another. It'll just be good to connect this huge chunk of capital to the rest of finance. And although this is already possible via TradFi, it won't give any transparency. So I think it's a very interesting challenge.
Okay, Ilia, fascinating stuff. If people want to hear more from you, where can they find you on social media?
It's at my last name and then my first name. Good luck with that.
I think we're going to have to help people a bit more than that.
Okay, at VOLOKHILIA.
Okay, thank you. And Gareth, our listeners hear you and they just can't wait for another week to hear this episode. They want to hear you every day. Where can they find you on a daily basis?
Cointelegraph has a daily X show called Chain Reaction that myself and Robert Baggs co-host. So every day, 3 p.m. Central European time, 9 a.m. Eastern time. Nathan, we saw you in the audience the other day and Robert tried to bring you up. So next time you sneak in and listen, we expect you to join us up on stage and be a part of the conversation.
Yeah, I heard him inviting me. I was in the car with 3 children, so it would have been 4 for the price of 1. And I didn't think any of your wonderful listeners deserve that. So I'll have to go incognito. I could be Gareth Jenkinson too, or something like that. Listen, this has been a really interesting conversation, and I feel it's kind of a moving target. I feel by the next time we speak to Ilia, whether that's in a few weeks or a few months, things will look different. We'll look back on this conversation. We'll compare where we stand then to where we stood now. And this is just a fascinating place to be covering all of this. So listeners, thank you so much for joining us. Make sure you tune in for the next episode of the Clear Crypto podcast. All that remains is to say goodbye and thank you to our friends at Tonal Media for producing these episodes.